What's up, everybody? It is Monday, September 20th. I am back from Washington and my hike on Mount Rainier. It was a good time. Got lucky too, because that one day that we did hike on Mount Rainier, it was a beautiful day. The other 2 days were rainy and gloomy, I guess typical Washington, I don't know, but had a good time anyway. And Mount Rainier is really cool. If you ever have a chance to visit Mount Rainier National Park, I would definitely advise you to do so. All right, let's talk about what's going on. We had a nice little correction in the market today, although by the end of the day, it was well off its lows. Now, folks, if you go back to about a week ago, I made a video saying, hey, the stock market is not reflecting the slowdown in the economy, but it will. All right, and I think around 10 days ago I said the market has a reserve problem, and what I was talking about there is this, just relentless buildup of reserves in the banking system, and how the Fed has been, working hard to offset this, with banks are putting deposits into the reverse repo facility, money market funds putting deposits into the reverse repo facility. That has been helping somewhat in, keeping reserves from really exploding, but nevertheless, they have been going up. And the banks have been, I guess it's fair to say, they've been managing it pretty well. I've been talking about how well capitalized they are, and we have actually been seeing loan growth expand. We have been seeing banks' assets going up, but we kind of hit a wall on this, because in the latest banking data, which covers the week through September 8th, was the first time now we started to see the negative impact of these reserves. We saw loans outstanding went down for the first time in 11 weeks. We saw banks liquidating securities, namely Treasury and agency securities and mortgage-backed. And this was also the first time in about 11 or 12 weeks that we saw liquidation of this nature. So we're starting to see a negative effect from all this reserve growth. Today, by the way, the Fed did 1.224 trillion in reverse repos. That's actually a record for a single day. And I think it comes at a time, I think this also speaks to the fact that, again, the banks and money market funds are saying, here, just take this cash. I mean, there's nothing we can do with it right now. We are under the constraint of these regulatory, guidelines, and you got to take this off our hands. But this is, in my opinion, what is affecting the market in a negative way. You have financial asset sales by the banks in order to stay within the guidelines of those regulatory ratios, of leverage ratios. And, we've seen this in the past. This is not the first time that we see the market being impacted negatively by, massive reserve growth that happens in a very short period of time. And again, I mean, I have made numerous videos on this explaining, or I should say debunking, how most people view this problem. They view it like the movie It's a Wonderful Life with Jimmy Stewart, the Bailey Building and Loan. They think, oh, the Fed's pumping in money. They're pumping, they're juicing, they're pumping. They're going to lend it out. That's not what happens. I mean, I've explained this so many times, that these massive increases in reserves, which are bank assets, banks need to have a certain amount of capital to cover, their assets. And I mean, if the Fed and Treasury are dumping trillions upon trillions of reserves onto bank balance sheets, they have problems with that. They need more capital, or they need to liquidate or reduce the accumulation of other assets on their balance sheet. So we have finally hit the wall where it's not just now, that they're slowing down loan growth, they're contracting loans, but they're actually selling securities, they're selling treasuries, they're selling MBS, they're selling agencies. So, I mean, this is a problem. And I've been saying for a while now that you need to have a debt ceiling increase. If we get a debt ceiling increase, then I think the problem goes away. Because what are government bond sales? What are government security sales? That's a reserve drain. That's what that does. That is not borrowing. The function of that is to drain reserves. All right? And we cannot do that when Treasury is operating under the debt ceiling. Let me also mention this Evergrande situation, this Chinese real estate firm, all right? Because everybody's going crazy over this, and frankly, I don't see what the issue is, other than it being another one of these, headline events that people react to emotionally because they really don't understand what's going on. And some real estate company in China is, I guess, having a solvency issue, and what, that's going to tank the U.S. economy. I seriously doubt it. I seriously doubt it. Now, I've been told that Evergrande, its liabilities are denominated in dollars, U.S. dollars, which is completely stupid. And again, it's another example of this just crazy, irrational phenomenon that we see throughout the world, that, in every country, for some reason, they all want to become dollar zombies. They want to borrow in our currency when, they have, I can understand maybe for really basket case countries, very small, limited economies. All right, maybe you can make a case where they need to be dollar zombies to some degree. But China, come on, it's the largest economy, or the second largest economy in the world. But anyway, I chalk it up to Wall Street. I mean, I've been on Wall Street for many, many years, over 40 years. And these are the best salesmen, bar none, in the world. They will sell ice to Eskimos, is the old saying, okay? I mean, so they go to these countries, they find clients who are very eager, and they say, hey, we'll raise money for you. You got a great idea? That's fantastic. You want to develop all these properties in China? That's fantastic. We will raise, funding for you in dollars. And the next thing you know, I mean, this goes back, this is not just a recent thing. I mean, this goes back, to the days of J.P. Morgan and even before that. And these countries and these entities get hooked on dollars. They essentially borrow in someone else's currency. If there's going to be a connection between Evergrande and the U.S. economy, the connection will lie in the fact that some U.S. financial institution extended credit to this Evergrande in dollars, and they end up in trouble, okay? In which case, maybe the Fed would, think, hey, we got to intervene. That would even make the situation worse, and I'll tell you why. Because if the Fed starts pumping and juicing more reserves into the banking system, you're just going to get a continuation of this sell-off that we have going on right now. I mean, we need to get the damn debt ceiling raised. All right? The debt ceiling has got to be raised. If they raise the debt ceiling, I'll tell you this right now, you're going to see a bottom in the stock market, and it's going to continue on its way. Now, finally, I'll just say, today's Monday. Okay, you know what happens on Monday? I sent out the new edition of MMT Trader, so go to my website right now, pitbulleconomics.com, and sign up for a 30-day free trial. I mean, I told you all this stuff was going to happen. If they raise the debt ceiling, then the whole thing stops. All right? We bottom out, market starts going higher. Fiscal flows are still good. You know, they slowed down a little bit, but I think I said in a video recently that, look, if they're doing 600 billion a month, which is down from 980 billion that they did in March, yeah, okay, that was enormous. But 600 billion compared to, you know, what we used to see monthly before the pandemic, which was like 400 billion. 400 billion was enough to keep the stock market on an upward trajectory. It was enough to support corporate profits. It was enough to keep U.S. economic growth at 3%. I mean, if they're doing 600 billion a month, and yeah, that's a slowdown from almost $1 trillion a month, but it's still a hell of a lot. So I think everything will be fine. Today was understandable because of the reserve problem. Go back and listen to my video from a week ago. I talked about it. Anyway, that's it for today, folks. Don't forget to like and subscribe. And see you tomorrow. Bye.